Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Hope you're having a lovely week. We've had a lot of volatility, a lot of two-sided trading in the ES, and we'll be talking about that. Also, the current condition of the market and structured trades that we discuss in the Bookmap Discord Trader Lab community. This stream's about integrating Bookmap OrderFlow tools with auction market theory. That is how the market works. And market mechanics, why the market often does the things that it does, and how you might get in alignment with it using structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab community. In addition, in the Trader Lab community, there's a library of, PDFs, 60 of them, of structured trades that you can take a look at, reverse engineer if you find them interesting, and a library of webinars as well as the Trader Lab community, and all that's available at no cost, as well as a lot of additional education in the Bookmap server. The Trader Lab is a community of traders, and the idea of Trader Lab is to bring together traders, whether newer or seasoned old dogs, to leverage our collective experience. It takes basically a community really to leverage so we can all make progress together. Nobody has, shall we say, a monopoly on anything in trading, but I think together, as they say, more is better, and that leverage can help us accelerate our development. And if you're interested in developing the business of trading, this is really what the Trader Lab is all about. And of course, there's no cost. And these streams, by the way, are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, screenshot, and to build out the business. Trading is not a video game. I know it can feel like it, it might look like it, and a lot of us come into this for our dopamine fix. But the reality of trading, at least in my opinion and experience, is that it is a gaming process within an uncertain environment. In other words, a random distribution of outcomes. Now, in order to get a distribution of an outcome, it has to be a distribution based on anchored inputs. Otherwise, it's just garbage in, garbage out. And you've all heard that before. Well, if you have an anchored inputs, you're now putting yourself somewhat in the same business model as Las Vegas. Las Vegas only plays games that are anchored, in other words, exactly the same way, not like what a lot of retail traders do, which is throw a smorgasbord of indicators and time frames, and somehow with all those random variables that they create consistency. Well, you cannot measure inconsistency to know if it actually has an edge. The casinos don't play their game that way, and I think they're pretty successful only playing games that have an edge, and in our business, only taking trades that we have isolated and identified that have a statistical edge. If you can avoid what other retail traders do, potentially, you can create an edge, extract it, determine if it does have an edge, develop the discipline to manage your emotional triggers because you have a statistic that's tangible. You're not behaving based on your fear. And we all have fear. By the way, the current trade, and I'm going to get into what we are doing today, is a short. And the goal of this short currently is to get to around 54.80 and then potentially to come out the other side, to come down. And there's a specific context for this, but I'm going to be talking about it. And nothing we do here on the stream is our trade. This is not trade calling. You don't need that. Everybody can call their own trades. The thing about it is, can you learn how to trade? And is there something you're doing right now that is really only random? The challenge we all face in this retail space is that random behaviors actually have winning trades. In other words, you could throw a dart at the wall, you could flip a coin, do I go long or short, and you'll have winning trades. How does that translate into a potential career or a business model? Ask yourself the question, because we all win. Even if we're losers over time and we don't stay in the business, we all have winning trades. If you can accept that fact, then it's how do we get more winning trades? Is it just doing more of what does not have an edge? Or is it potentially eliminating the random successes that don't have a statistical edge? Where would you be if you understood that process, had the tools to do it, and were in a community that was aligned with that process and thinking. That's the Trader Lab, and you're all invited. If you're in YouTube visiting, click the link in the bottom of YouTube, and there's no cost to become part of this community. General disclosure, all Bookmap Ltd. Materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of losses. Is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is based on structured trades that are available to everyone in the Bookmap Discord Trader Lab, as well as other tools and additional education, stocks, options, crypto, order flow with a high-tier tool like Bookmap. You'll see why understanding order flow is so important for time potential. I always have to say potential because who knows, right? It's all random. Potential timely execution and trade management. If you want to think about it, the closer you can get to the interaction of the participants may allow you to execute on a more timely basis, manage your trades, etc., and see changes in behavior. That's where order flow can be helpful. In addition, it's important to understand how the market works, why it does what it does, and how you might get in alignment. Now, the other thing to understand about trading, we all take stops. We all have losing trades. It's overhead and cost of production, not a personal failure. When you are emotionally attached to the outcome of a trade, you're no longer trading like a professional. You are trading based on your emotional triggers. It's a whole different element. Now, let's go to RTH Open. I'm going to take you into some elements here and what some of the trades are. And again, the thing about what I'm going to share in the stream, there's no one way to trade. The thing that's very interesting that I have found is that it's a psychological alignment. If you can understand how the market works, in other words, actually understand the market mechanics, you can isolate the rotational size that you want to participate in. In other words, there are some traders who are going to trade, 4 or 5 points, whatever it is. What you're going to see in the stream here is that the triggers to get into a trade are the same. So what starts out looking like a scalp, because we're using microstructure, then it's at the edge potentially of a rotation. This location of this edge and the targeting, which is statistically based, which I'll share with you, determines the rotation. Then, or the targeting, I should say. So if you're 10 points away from a target that has statistical probability, then you're working on the 10 points. You also have a trade management process in this, so that if the market comes back at you at a certain, whatever that is that you have vetted, you get taken out of the trade. And it might go on again then to the target after a counter rotation, or may go directly there on a beeline, or you'll take a stop. That is our business. Prediction is not our business. Edge is our business. So this is Trader Lab. And thanks for visiting, guys. So let's look. Over the last 2 days, you notice it's been kind of a shootout between the buyers and the sellers. It appears to me maybe the sellers have a bit of an edge. They've been doing a pretty good job fighting off the buyers. However, and here's the however, as they say, maybe. And by the way, everything is maybe. So prediction, nobody predicts. Most retail traders put all their energy into predicting what's going to happen. It's natural, by the way. But I have to really say to you guys, the casinos can't predict the cards coming out of the deck or how gamblers play their cards. So they're not in the business of prediction. Why would we think we're in the business of prediction? How about we can't predict anything? We only should play games like casinos do, if you will, or setups that have an edge. Then the outcome is random. This is the highest volume from the last 2 days. I labeled it. It is a retail price. In the store, when you go shopping, the price of a product where the high volume is the accepted price. In other words, buyers and sellers come together. Yeah, Louis, can of tuna $1. I'll sell you a can of tuna. You buy a can of tuna, $1. Well, in the world of S&P, based on the last 2 days, this is where the highest volume was, right there. Now, below here, there's a couple things. Overnight mid, okay, and the naked volume point of control. This is market profile terminology. A volume point of control is also where the highest volume is. Yesterday's RTH, this is where the $1 can of tuna was, okay? And we take those 2 days and put them together, it shows us where the overall volume is for the past 2 days. So this is for 2 days, so it's a little higher time frame. This is for yesterday. I know coming down, these are important areas to check, because it's where the shoppers, the buyers and sellers decided, hey, we'll sell it to you here, I'll buy it from you here and here. And this has a statistic. So that starts out the whole thing. Now let me go a little further just to make it fun. The ETH high has a high probability statistic. I'm not giving you stats. These are all available in the Trader Lab. So we know, I'm going to just say maybe 70%-ish here, maybe 69%-ish up here. I'm not looking at my sheet. Over about a 69% probability here to take this out, etc. And this is the current high of the day, I think. So now coming in, now all this is posted in Trader Lab. I'm not going to spend a lot of time because otherwise I'll be talking to you about a lot of stuff and you want to see what we do. But before the market opens, these levels are on the chart and they're only levels. They're auction based. In other words, I don't use any indicators. I found that if I understand the participant language, the behavior of the participants, which creates the movement in the market, when we come back to these levels that the participants created, not my indicator, I want to look for what it says, language. So without indicators, what do? I read this. And all it is language. And indicators are fine, but what are they? Translators. So do you want to use a translator or do you want to learn the language? This is what Trader Lab is. Now, I'm not saying you can't use your indicators, but most of us in the retail space kind of think the indicator is the way to go. How about understanding how the market works? And then when you can define market mechanics and structured trades, add an indicator in to give you something a little more, you know? But the indicator does not wag the dog. It's the market participants that wag the indicator, right? So here we go. RTH open is here. This is the overnight volume point of control. Let me tell you what this is, 82% probability. Not so much interested here. I mean, right? Now, if this was someplace else, it would be material. But the fact that it's here, so not so much. But in the ETH, we were in rotational trading, two-sided trade, okay? So we have the ETH high, the ETH low, and then it's a matter of who's on first. So let's go see. RTH open. Now I'm going to describe structured trades to you. How you use these is going to be up to you. This morning I had a very interesting in chat. This is all going on all the time. I was looking for two-sided trade today. Now it's not a prediction because I can't predict anything, but I can anticipate. And in trading, we anticipate behavior. We also define changes in behavior. That's called context. So the initial thought process is two-sided trade. That's called mean reversion. And the idea of mean reversion is it's outside in trading. So, of course, the joy is what's outside. So let's look at the RTH open in the first trades. Now, so you have options in this. Now, let's go back right to the top. Where's my locations? Now, we don't know anything. We know this is here and this and a little below, and we know the overnight high. And, you know, if we get through here, then we'd be going south of the border. So I'm looking for longs. That's for me. Now, let me show you a short. And the reason I'm saying this is if I see a short, I have choices. I can take the short, or I can stand aside when I see the short and wait for the long. This is trade plan specific. So in the Trader Lab, and this is always interesting, you could do anything you want to do. You could take the short, this is a short, by the way, and then cover it down at targets below. Or you can skip the short and say, oh, I see a short. I'm going to wait now. I can't get long here, here, here. Where's my long? Down there. So my first trade was a long. Other trader in Trader Lab took a short. Don't you find that interesting? This is where understanding market mechanics come in. So this right here, let me show it to you. Now, I'm going to show you order flow, and I'm going to show you how it works. Post your questions in YouTube, and remember, these are not trade recommendations. This is market mechanics, how the market works, why it does what it does, how you might get an alignment, then put a helmet on at the same time. So right here, I'm going to turn these off a second. Hold on. 1 second. Only because what you're seeing, those green lines, they are actually measuring the current high volume areas. And I use that in my trading. It's a terrific tool. They're called price lines. They're available in the marketplace. And I think it's very usable. Hold on. Just lost the chats. Okay. Sorry, guys. So let's come back. So this is retail in the ETH. Is it too high? See? So if this is where most of the volume is in the ETH, and down below, I have what might be too high from the higher time frame fractal. Time frame and fractals are interchangeable, except there's no time in a fractal except RTH, because that is governed by the clock. Otherwise, not so much. This is a fractal. So I'm going to show you this. This is called, right here, this yellow line, developing volume point of control. This is the point of control from the ETH. It becomes fixed at RTH open. It doesn't change anymore. So if I open right here, I'm opening in a fair price area. And what does the market do, you ask? Well, it just doesn't hang out. Why do we even have a market? What's too high? What's too low? What's fair? And it does it at all time frames and fractals. So right here, I'm looking for what? It's either this is going to be too low, we're going to go up, or it's too high, and I'm going to come down and test. And my suspicion is, in order to go up, the market needs to go down. Why do you ask me why? Because if I get early sellers, and the market is weak, if I get these sellers in here, which is what I'm anticipating, and again, no clue, and this is a short, by the way, but I'll give you the rationale. If I get the sellers, I'm going to have buy stops over the opening swing, right? If I see the sellers and I get a buy, now I have the guys, the buy stops here. This actually potentially, I was going to say potentially because it's all, I'm clueless, not ignorant, but clueless. If I come up here, there's buyers here because buy stops get lit up. It carries my trade. I hope that makes sense. So this is a short. Here it is. I'm going to show you the microstructure. I'm going to do a little drawing. This takes me some time to do, but I think it'll help you visualize what's going on in the order flow. So I got a buyer here. This is delta, okay? And it's right before the open. All right. I come up here, RTH open. It's right there, 8:30 Central Time. This right here, actually, yeah, I'm going to do this anyway. This, and I'm going to label it also. I call it a variable high volume node. And high volume is like shopping. And the way this works is the auction is as volume comes in, the participants in all fractals and time frames, whatever you want to call it, and there's the micro volume. I'm now in a microstructure. Think Russian dolls. If this is the case, then if this becomes too high and right here, and I leave it, this might be too high. This sets up a short. Let me show it to you. Notice the VPOC migration. Where does it? Now, this was micro. This is the next location. I'm just walking you through this. Now, nobody can be putting lines on the chart, while this is happening. We're in, the market is open here, I don't know, 10 seconds or something. So I always tell Trader Lab participants, you want to narrate this, but you can't trade it unless you're very proficient. In other words, unconscious competence. Break here, so you see microstructure. I'm not paying that. Think of this like a store. It's a consolidation. If we break away from it, and now there's more volume here than there, this sets up the short. Okay? So this is a short, and I think one of our traders took it this morning. We were talking about it. He says, why didn't you get short? I said, well, I want to get long. Oh, okay. VPOC migration, too high. I'm going to label this. So he's on the short, and I'm going, actually, I'm not. I'm going, great. I love the short. I want to get long. He's saying, I love the short. And I'm going, we're both right. As long as we get paid. VPOC migration, going to zero, right? Well, if I took the short, and that's my option in my trade plan, doesn't matter, could be you. Where's my target? Here. Right here. There's my target. By the way, can I predict? Nope. Do I know? Nope. What do I know? Maybe. That's the best you got. Write that down. Maybe. So let's look now. Now we're going to get into the microstructure. So all of this is short, having a great time. Get the bottle of champagne out. It's going to zero. Target. So now there's no precision in any of this. I always say horseshoes and hand grenades. So what I do is I know it's going down here. So, and I'm not on the short. I want to get long. Why do I want to get long? Remember? Opening swing high, shorts in the leg. I want to squeeze them. And again, when I say I want to, it's also what they say, hope and a prayer. Now I'm going to go to order flow. So I'm coming down and I see sell stops. This is stop an iceberg detector. This is delta. Delta represents market orders. So a stop, it becomes a market order, and a seller is a market order. The thing to understand, there's always a passive side and an aggressor. So a market order is the aggressor, right? And that's what delta represents. Whether it's a stop or whomever, it's still delta. So I see the aggressors, and I see the stops. I see the aggressors. I see the stops. What do you notice? Less. So I'm going, okay, I call this stop divergence. I don't use indicators, but divergence is very nice, even though it get me run over as much as anything else. But I noticed that if I'm seeing this, sellers, and I know the makeup of these sellers is stops and sellers, initiators. If I have less stops, and then of course I'm thinking for it to go down, I need more initiators, market orders coming down, then what? So let's look. Stops are here. Going down, that's divergence. Now, I can't tell anything. I'm looking at this. It becomes a suspect. I see a buyer here. And that's a buyer. I haven't seen one of those in a while. I know my sellers are here and here. Let's just look. I get my sellers here. Going to zero, right? What is here? I don't see anything. I mean, I see a seller. I don't see any stops. Do you? I don't. So I'm going, this is where the grunting, groaning, and twitching of the eye starts. Because I know now, because of alignment, I have a potential rotation setting up, and I don't know. So let's look at the evidence in micro. Now I'm coming down into what you guys think of time frames. I don't, because there's no clock involved in this. It's called fractals. And I use something called volume profile. And where's the volume? It's right here at the moment. So when we're directional, or just cruising, and then when we pause, it goes into a chop. This is a consolidation. That's all this is. Inside a consolidation, what is a consolidation? It's a fight, really. It's just all of a sudden we pause. There's sellers up here. There's buyers down here. When you see the green bubble, the buy delta, and we go lower, why? Because they were absorbed. When we go lower and we don't continue, now you don't know until you come back above, they were absorbed by the buyers. So what I have here is sellers. I have buyers here. If we're not going higher and we don't clear these guys or these sellers, then the sellers are still in control. I don't know the sellers are still in control until I get below these buyers. Now I'm below these buyers and I get a seller. I need to get above these buyers because the sellers are here. They are absorbing the buyers. Follow the story. The buyers are here. They're absorbing the sellers. So the buyers are here. The sellers are here. The sellers are here. being absorbed by the buyers. So this is a consolidation. I want you to see. Now, let's draw a little line. Now, again, when I'm doing this, I'm not drawing a line. I'm just reading it. This is language. So I'm reading a foreign language. I get it. And let's do something else. I want you to see the consolidation. So I'm going to draw the structures so you can see them. Hopefully I grabbed the right thing here for you. What you're going to see here is the following. Right here, you'll notice the sellers are here. And now right here, the sellers are capping the buyers. And under here, the buyers are capping the sellers. So I have this forming. It's a consolidation. That's this is low volume out here because there's nothing going on. And there's nothing going on down here. And your high volume is here. This is the same as that. This is a 2-day high volume structure. If you overlap the 2 days with the volume profile, the highest volume is right there. That's my target. And again, clueless. If I break out of this down here, I can just go lower, and then I know it's too high. If I do the opposite behavior, then it is telling me too low, and I have this, maybe, underlying, clueless, too low, and it sets up a long. So this is the first trade I took. We break out here, I get long. Now, what am I looking for? I'm looking for to cross this, to cross this, to cross this, and to squeeze out. Now this, so I have this as resistance. I have my mid here at the time. I can anticipate potential sellers. This is resistance, right? Because all of this was when we were coming down. I like to spend time with this so you can understand. Then, where's my opening swing high, you ask? It's right up there, and this is resistance because I drew that line. Let's just see what it does. I'm going to now. This is where, what is this? Too low. What is this? Another long. This is resistance. Observe. Resistance, resistance, long, resistance, resistance, long, resistance, 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 resistance. Notice the behavior. Why is it happening? Because it was too high. So what do I anticipate? Rotation. Watch. VPOC migration. Do you notice something? We were migrating down. The market was going down. What has happened? We've crossed above. We went to resistance. We pull back. What happens here? The volume is now here. Too low. What is this? Same as it was here. It was a short coming down. This is a continuation long. Why would I do that? Opening swing high. What's above the opening swing high? Stops. Long. Statistic open above. Here, next target. Target. Does everybody track it? I'm just showing you the first sequence of trades. Yes, and you do need an airline sickness bag. And let me show you some more long entries. This is all Trader Lab. So we know about this, okay? So we shift here. We come here. Too low. Another long. Scale here. Going for the ETH high. What do? Come back here. Where do we come? Back here. Another long. Scale here. Where do we come? Back here. Another long. Where's our resistance? It's here. Watch. Scale there. All of these are Trader Lab structured trades. Now, target here, by the way. Now we have another target, which is on the price parade. This, 55.05. In fact, on the long, which is you guys know I took, now I'm only talking the broad strokes here. Subject to your skill set and trade plan, you could be, well, I'm just going to say selling, buying, selling, buying, selling, buying, or just long, go to breakfast and target this and this, or get short. And I mean, you can do whatever you want to do. You know, this is all part of the joy. By the way, what was this? Too low, right? See what I'm saying? And this was too high. Something's going off here. Did we get my target here? I'm not buying. It has nothing to do with me. The auction, 05. Hold on, guys. You know, I'm not looking at the current market, so I got to go see what's going on. Oh, 5.5, 5.25. I better catch up here. I'm missing all the fun. How are you guys doing? Post questions. I'm going to come up now for air because I'm still. Hold on. I got to turn off some of these alerts. I got the little hand comes out and gives me a little slap in the face.
Stop ES by 315. Sweep S&P buyers 5,507.5.
See, that would have been nice this morning. That was what my target, 55.05 quarter was the target on the longs for me, but it didn't happen. You know, that doesn't matter, by the way. So you can do anything you want in this. I think I'm going to, well, you guys want me to show you these structured trades, or should we try to get into real time and I can show you microstructure? I'll give you, it's your vote. Please give a thumb up in YouTube. How about it, YouTube? Coming down here, 9:30, we have the IB stat. Now, for me, when I saw this selling, I thought the longs were over, and I went into a mean reversion mode, which is outside in trading. So what I did then, for me, and this is what I was narrating, until it changes, I kind of stay with what I perceive to be the condition of the market. So when this happened, and I actually posted that I was looking for a short if we took this out at 9:30. So it was come out here, right here. And this, look what the time is on this, like 9:27 or something. So I was monitoring my long, going for this was my target, and looking to get short up in here. But it did it before 9:30. So I'm at 9:28, and I have the possibility of taking out the first hour's high has a high probability in this configuration. When I saw this, two things went through my mind. First of all, exit the long. So I got out, and it was a fine trade. I showed you where I got in, and I'm not going to discuss the ads, the scales, and all the other rigmarole in the time frame or fractals I operated. But there was a very nice morning for me. Then this happened, and my plan was at 9:30 that if it came out here and came back under here, I would get short and take this trade. So this was in my plan, but it didn't happen per my plan. So all I did was exit the long. I didn't get the short. So then I'm going, you know, I have the emotional wear and tear going on at that point. Then I'm going, well, if this was very aggressive selling. So, and I know the market's been two-sided. And I said, well, sellers seem to have been doing a heck of a good job lately. I wanted to take the short. So I didn't get the short. So I'm saying, well, now I've crossed under. I'm still holding this area. And I was posting rather frantically, or not frantically, but repeating, this is a major anchor to the long side. But when I saw this, I thought, well, maybe we're now going to come under and maybe get here, because this has, I think, about a 70% probability. So it was kind of, that's it. That's all I have in trading. I go, because I don't know. Nobody knows. So I come out here. Remember, this is where the long set up. So this is my outside edge. This is my outside edge. And I'm thinking, what? Mean reversion. This is the mean. So for me, mean reversion is outside in trading. Now, when I had this kind of selling, for me, it set up no longs because, and I'm just telling you my trade plan. Doesn't mean it's anything, good, bad, or indifferent. It's like everything in this business. It's like sometimes, whatever is whatever. So this is vulnerable opening. This is a swing low now. So I know there's stops under here. So for me, I don't want to get long now. I want to read the longs and then take shorts to come back here in rotation. So if I'm anticipating rotational trading with the possibility to come out the bottom. That's my anticipation. That's what I post. That's what I do. So let's look. So now what I'm looking to do is come out, and this is called mean reversion, and trade rotations. So I changed my plan from 55.05 targeting to a rotational trade plan. So now I'm in a rotational trade. So outside, short, back to here, this kind of thing. So that's what I started doing. So in fact, I think I narrated this one. This was a short to mid to VWAP, and then this is the next target, and then out the bottom. Okay, it got to here and here, and I think this is the last trade I was talking about. There's two possibilities here. The retail traders automatically buy mid and VWAP, and I always say everybody wins sometimes. My trade is here, so this is a short to here to here to here. This is my resistance. You can see it there. Okay, and I have this resistance above me. So right here was a short, and I said, we were talking about this in Trader Lab. I said, well, we can anticipate buying here because that's what retail traders do. And for me, I can't buy this in my trade plan because I'm trading a rotational plan. So the rotational plan is mean reversion. This is the mean. So I can't buy this if I'm anticipating this and maybe come out under here someplace. That's all this trade is. It's, and since we had a very aggressive rotation off the top, I'm now off the longs currently in this. Okay. So I know this is too high, and you can see it here. Here's the micro high volume. In fact, that's it. You'll see the short structure. I'm just going to throw a line on here. So you can kind of see how I look at this. So there's a few ways to do this. So right here, I have my chop, 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 right? This is that consolidation. So I have my sellers here. I've got my buyers here. You can see buy absorption, sellers. So it's a fight. I get my buyer here, go into the moon, Alice. But what happens here? These guys are absorbed. We break low. This is a trigger. It comes back here. My sellers are here. My volume is here. Sets up the short. Okay, so your short is against right in here, and you're going for this. And for me, I scale. You have to have timely entry. If you cannot execute well with enough range to get risk neutral, because we anticipate buying here and a counter rotation. So for me, right here is okay. It's what happens next. Is that okay? Because the anticipation in mean reversion, in other words, in what is perceived to be the current context, is these buyers who have stops under here are going to get taken out, and we're going to come here. Then we can bounce off this, or we can rotate under. That's the trade. So there's no long for me in this context. See what happens when we come back? So this was resistance. So I'm looking for this to fail. Okay. So scaling, no problem. Sitting there, and then stop is up here. So got taken out. That was it. That's the last thing I did. So now I'm looking at this, and that's the end of it. So now, but here's another piece to this, and this gets more advanced. This is resistance. This is now too low. This, which was the let's go here thing, failed. You could see the behavior. It's very readable. It's not predictable. This is readable for this. And then the trade continues, or it doesn't. When we have something called a change in context, you got to turn the barge around. Now there's a couple possibilities. Right here, if this is resistance, what happens at resistance? Break. Now we didn't break yet here, right? Why? What happened right here? You see the sellers? The sellers were here, over here, and the sellers came back there. The buyers and the sellers interacted. The sellers are these icebergs. What caused this was this 780 iceberg seller, right? Thank you. We come back up. What do we get here? The iceberg, the seller. The difference is this time the buyers absorb the seller. This time the sellers absorbed the buyers. And then the sellers were here. The buyers were absorbing the sellers. The buyers got absorbed by the sellers here. The sellers got absorbed by the buyers there. You see how this would work? This is the absorption detector. So I'm watching these things also. Now, but the thing we don't know is when a buyer shows up here, are the sellers going to overwhelm the buyer? Well, the buyers overwhelmed this seller, and then the buyers got overwhelmed by this seller. So this seller took on those buyers, and you see the icebergs, and we got the rotation. We come down. The sellers get absorbed by the buyers. So I know the buyers are active here because the seller was absorbed. I'm getting my sellers, but we're not going down. Why? Because the passive side is taking the other side. Now, the problem naturally is what's going to happen. That's part of the joy. So if we can't get under here and get the stops out because they're weak, that gives us insight. It doesn't predict, but it tells us maybe we got a problem in River City. Where's the last line of defense? It's right in here. If I take these sellers out, and there's the last, this is kind of like, this is what you call last gasp, and I break above it, and my sellers are here and here, and I get a buyer above here. Now, and this is more advanced. This is a reversal long, and your stop would need to be either under here or the last place the sellers were absorbed. Now, this is a microstructure. This is an advanced trade. I don't go into this in the stream, and for developing traders, it's not a trade. It's just a, gee, that's interesting. Now we have a statistic here. Take out the shorts from this leg. This is the IB stat, and this would be the next target for me, or manage the trade. And that's, again, all part of the joy. Let's come up to this high. Now, remember, I have another trade, and this is not a recommendation. It's the IB failure. It's a mean reversion trade. I don't call trades because I'm clueless as everybody else. And by the way, I know if you go to other chat rooms, they walk on water. Me, I use a life preserver. It's called a protective stop. It's not about being right. It's about a large sample size of random outcomes and using structured trades that have an edge. So if I'm wrong, which I'm wrong every day, so let's not talk about right and wrong. In trading, there is not a right or wrong. That's an emotional thing and a psychological need for approval and the rest of it. What there is in trading is random outcomes. Notice the buyers here. There's a stop sweep here, and the sellers are on this side. They are absorbed by the buyers. What happens to these sellers? We get above them. The buyers are here. What happens here? Any sellers are getting absorbed. The buyers are in control. Here's a seller. What happens here? Buyers are in control. Let's watch. Watch. This is how OrderFlow and a high-tier tool like Bookmap now are giving you an edge. Now, it's not the Holy Grail. There is no Holy Grail. There's just tools and randomness. Now, I'm going to show you how you might manage this trade, and then we'll get back into real time. So, buyers in control. Sellers take a shot here. They absorb this buyer. You see this guy? There's the sellers. Buy stop, selling icebergs. Absorption. Buyers now are absorbing the sellers in this little consolidation. Buyer, break high. There's your absorption. Too low, Lewis. Next leg up. Buyers, seller here. What happens to him? I don't know. Buyer here. Seller, absorption. Seller. This is a concern. Now, I already passed my target. Now, the way to trade, maybe, and this is always something you have to vet, it's fixed targets. You could be out here, hasta la vista, book the profit, go to lunch, or subject to the number of contracts. This is all individual trader specific. You manage a runner. The way I manage runners is I use fractals. So I look at this, buyers took control. I come up here, buyers are in control. I come up here, I see a shot on goal. I see a seller, Teeth start to chatter. But where's the last location that the buyers were very active? Here. So my stop is going to run behind. And again, it doesn't matter what I do. I'm sure you guys can figure it out and do it better. It's not what I do. My thing is aligned to my psychology. If I have a 15-point open trade equity and I give back 10 of it, it's not going to be good for me psychologically. So I've accepted that if I manage my trade a little more aggressively, I can get caught easily in counter rotations and then leave another 10, 15 points on the table. Am I okay with that? I am. You might not be. And I know traders in Trader Lab will put the trade on and go to the gym. Not mentioning names, but it's kind of a fun thing because it's psychological. He just puts the trade on and he says, I'm leaving it in God's hands. And what he's saying, I'm going to interpret it, it's random. So the outcome, we have no control. By the way, remember, I'm looking for a short in our recommendation. Just saying, I'm going to get to that. So buyer, seller. Now, right here, you could jump out of the thing because there's a change in behavior and there's a rotation. Or you're trailing, subject to plan. What do I see here? This is resistance. I see here, again, seller. I could very well just have blasted out of this thing here. So let's look. Do you see a change in behavior? Now, if you're managing it from out here, from here, you would not get taken out. But now you're going to leave more on the table. How do you feel emotionally about that? Here's the micro high volume. I break high, too low. What do I have here? Seller. I break high, too low. Too low. Micro. I break high, I see a seller. I take them out, too low. And now, it's wherever. I see the sellers, I break high, too low. And then I reverse. And now what? What's better? Trailing here, trailing here? I don't know the answer for you. If I get taken out, I just go, well, my emotions are saying one thing, but my P&L says something else over time. It's not about our attachment to the last trade. It's all of them. Right here, this change in behavior sets up a short. Now, I'm going to show you a short. Now, here's the problem naturally. How do you get into a short? Well, I'm going to show you. And I'm also going to show you why maybe there is no short. How about that? This is where the market found its sellers. How do you predict that? I cannot. I'm now going to mark this up. And if you have questions, post them. I'm going to come up for oxygen in a couple of minutes. I just want to set this up for the potential short. And these are not trade recommendations. All I'm doing is reading the participant behavior. I can't predict a darn thing. I can anticipate everything. And that also means I'm clueless. Because if you're clueless, and I really want to differentiate cluelessness from prediction. Cluelessness is being open to what might happen, not predicting what will happen. Let me just see the structure. Yeah, okay. See the volume here? Whoops. I'm going to just show you some structure, and you'll see how we might use them. I want to get these things on here. I can't see what's going on, but I have a sense. And you're going to see something that is, I think, not complicated, but it's all based on market and participant behavior, market mechanics. It's not based on an indicator. My indicator are the participant behaviors. So this is kind of what you got. So this is going up. So this is support. Support. Going to the moon. Break. Uh-oh. I get a bounce here. What does it do? It sets up this distribution. This is an outside edge of this volume here. I'm going to mark it. I'm going to call it a low volume node. I'm just going to do this to try to put some order. So that is an outside edge. Now, the market is built on directional moves and consolidations. That's all it is. So if this is an outside edge of this volume, this is the high volume area, which is based on all this volume in here. You can see these are fractals. So that's too high. I break down. I chop here. I break away. My volume is here. And it was set up in there. I come back. This is a potential short. This is a potential short. There was no entry up here. For me, it was only trade management. Now, if it gave an entry, fine, you know? So anyway, let's come back and just see what's going on now. Oh, there it is. Sorry, I didn't even know that's where we were. So what this sets up now, and remember, it can do anything. So the way I look at these, let's come back here. Where's the micro volume here? My absorption is here. My buyers are here. This is the volume here. If I get short here, I got to be scaling against this. Because you see where the buyers are absorbed? I'm sorry, the sellers are absorbed. The sellers are absorbed. The sellers are absorbed. I'm going to put a little line in here so you could see it. So what I do is I'm trading the volume and using order flow to help me see inside the behavior. So I'm not locked into an indicator. I'm locked into what these guys are doing. And I know this is where the buyers are here. If I get below these guys, and I know this might be too high, you see the buyer here in the absorption, the sellers are here, the buyers are here, right? So if I think we're going south of the border, and I'm that part clueless, but what do I know? That's a pretty good rejection, don't you think? And if I pull back and I find my seller again, and I get another leg down, and I find my buyer here, clueless, and I pull back to this volume, I can short it back to this. Bing, bang, for a scale. If I come back here and I'm staying below this volume, I can do the following. I can sell it here to here. This is trading in fractals. And if I can't get under here, I can get squeezed out. What does that do for me? How about this? If I'm risk neutral, which is what I share, and I don't like to use the word teach. I guess I do. I'm a Bookmap educator, but I'm not a vendor. You know, I'm not here to say, and you got to pay blankety blank to learn all the good stuff. No, you don't. What you need to do is roll up your sleeves and go to work. And then, and I mean work, there's no such thing as plug and play. You know, there's no secret sauce, no magic indicator. All the stuff you read out on YouTube and the internet, it's nonsense, in my opinion. Again, it might not be for you. And if, by the way, if you have the holy grail or the secret sauce, come to TraderLab. I know that if I get short, you see that that's my scale. I know if the buyers were here. So I have choices. I'm looking for shorts. Doesn't mean the market won't make a new high. This is the part of the randomness. So you could see what I'm doing. So I get taken out. But now, what do I know? Let's come back. I know this is where it was too high. If I come back under here, and there's exhaustion here, this is rotational trading. So right here, I just kind of sit and wait. And I'm not calling trades because this is not easy. This is too high. And let me come back to these, and this is my outside edge. That's why I put it on here. So I can come out here. We'll see what it does. And if this is too low, we can just keep going, right? That's why it's on the price map. If I don't get under here, nothing to do. Trade is out. That's the end of it. And now I'm just sitting here. But you see the real world. I'm not saying I have no lock on, you know, not clairvoyant yet. This here for shorts, if this thing is going to go south, there's two possible trades here. Actually, two here at this location. One is break below it for a continuation long back to one of these resistance areas. Now this is support. Remember, it is support. This was resistance. This is resistance. Let's keep that in mind. This is called the low volume node. I'm going to label it right there. It's an outside edge of this distribution. So this is like your sandbox right now. So too high, too low. Let me label this, and I'm going to just check one other location for us to look at, and then I'll look at your questions. Thanks for your patience. I'm just trying to stay current with all this. So let's come back up here. What was too high? It was out in here. So this. So this area here is the outside edge of a distribution. We can come out here and then do this. And I'm not saying it will. I'm saying this is what I anticipate. It could also just keep on trucking. It doesn't have. This right now is a support area, and this is a support area. And let me show you something in fractals. You might find this interesting. If this is a low volume node, what is this? It's a low volume node. See it? This is the fractal nature of the market. We are trading in a multiple fractal, or you guys think of it as time frame. So this is how you can look at this. We can go, and I always think of these like Russian dolls. You know what a Russian doll is. Bigger one and a little one, they're all the same, but they're inside each other. So if we come outside of this, we have this. That's the next one down. This is a consolidation, and it happened. Let's go back and look. Here, right here. So this, let me draw this for you. This is why I'm a big fan of auction market theory, because it is an auction. The consolidation here, where these sellers failed, is an auction. So I would put this is what I do. I didn't do it here because I'm unconscious, but basically, let's look at it again. I'm going to draw a little line. You're going to see me do something consistently. Market is random. Process needs to be anchored or consistent. So what you have is the following. In this distribution, here to here to here to here is an auction. The high volume was here. If this is too low, we break away from it. It sets up a low volume node here where this acceleration was. So this outside edge, and a low volume node here, and this is retail. If this becomes too low and I now find a new retail price, I can do the same behavior here. And that's exactly what happened. And if this is too low, I come back to there, and then I can come out here. And now I'm rotating in this fractal. These are called mean reversion trades. It's fractals, so it's Russian dolls. They're inside of each other. So when you guys think time frames, I'm thinking fractal. Same thing. It's just not clock regulated. So if this is too low, and I break high, and I come back, and I test this, and it's now too low, then this is my mean. So it's long to there, and then where's my outside? Might be here. Don't know. If I get through here, then what do I got? This. Let's see now. Now let's look. We have to see the behavior here. So the market appears to like the long side, doesn't it? So my last trade for me would have been a short to here, and it would fail. Then the question becomes, if it's in your plan, you'd just be off the longs, or you're looking at the short, you'd have these levels identified. I just hadn't seen this. Don't forget, I don't see this stuff until I get to it when I'm narrating, because I'm not looking at any of this. I would know this was an important location. And this gives me the hint. Absorption. Now, I don't know. So I get my short, and now I'm thinking down, right? But I see absorption here. I see absorption here. So this actually sets your long up, which I didn't see. So that's life. So you'd have this, your stop, actually in this trade would be down here under what was too low. Can you see kind of the logic of this? If this is too low, that's high volume, think retail price in the store. This is a store, consolidation. If it's too low and I break high and then I come down to this outside edge, what was too low? It was this price. If I come back under here, I'm going here, and you're in trouble, and you pay to play. If we hold this, then you come here, then you come out here. If you get above here, then you're testing this and maybe taking it out. That's what I know. I don't know anything more. So we anticipate now these guys are going to get run over. This would have been a nice long. I didn't see it, so I can't tell you about it. Are you guys with me? Now, if I took this trade, now I have to tell you, I was not aware of this. And that's part of the downside of not having everything in front of you, because I haven't seen any of this. I would be marking these. So that's the best I can do when I'm doing this, you know. But not an apology. It's just the way it is. But let's say I totally missed this because I'm asleep at the helm. Then I would take a short, I'd get a scale, and I'd get taken out. And I wouldn't have my long location. So I'd just be done, you know, until something's set up for me. But this is a long. So this is a short to here. And if it breaks here, it goes down. If it doesn't break here, it goes up. I know. Brilliant, right? Where's your entry? Either here for a long or break above this, test here, see the buyer, and you could be long to there off of this. And then you got this. So you see what I'm saying? How you can break it into chunks. So we have a seller here. We got our buyers above them. Right now, where's our support? Here and here. Let's watch. Questions? Now I can take a look. Sorry, guys. Please give a thumb up if you're in YouTube. Yeah, this is trading in fractals. So this is what I know. Now, first of all, there's sellers here, and this is where I would be taking profits for scale. Why? I had my sellers here, and we got this. This is the outside edge of this. So you have, here's what you have. This to this, too low. Boom. This to this, too low. Bang. Come out here, come up here. Too high. Sellers here. What do I know? If I can get above here, this was our target from yesterday, by the way. Who knows? No. And it doesn't matter. So this was our target yesterday. So we got right to it. We may not take this out. So for me, I trade the targets. That's why, well, look what you're seeing. Can I predict this? Nope. Do I try to? No. Can I? Nope. Not my job. I lead that to those who know where the high and the low of the day are going to be before it happens, not those who say they knew where the high or the low is. If I get, and I do at times, buy the low, sell the high, and I have no clue until I can look back and go say, oh, look at that. What a coincidence. Because that's all it is. There's no such thing. And again, if you have that skill, you come to Trader Lab because we all want to be clued in. But the levels do give us ideas of potential. That's what these levels do. So what is this? Why is this line here before we got here? Because that's where the sellers were activated. I come on, and I can't predict it. Remember that. So let's watch what happened here. Is this too low? So what do I have? Outside edge is here. This is retail in a fractal. This is too high in a fractal. And this is too high. So let's come back. What do we know? Buyers were active here. Sellers were active there. You see it? Buyers were absorbed here. This is a microstructure. This can be a short, but you're trading in a very tight rotation. It's just how you want to trade. Do I know it's not going higher? Absolutely not. If I get long on this structure, or if I got long here, which is really where the long should be, you got to scale here or, again, ahead of this. And then it's whatever. You got long here, you got to scale ahead of this. If I see the reversal here and I can't get above here, I'd be out here or short back to here to get the stops that are under the swings. It is rotational trading. I'm not saying anybody should trade like this. I'm saying this is what I do. But let me give it to you another way. You could just be sitting, this will really get you nauseous, long from the low of the day. Because that was, the long that I took this morning. And you could just be riding through all this stuff. Me, I need an airline sickness bag, so I can't handle that mentally. What I do is I found for me, I just, bob and weave with the thing and try to stay in alignment using what my understanding of market mechanics and good trade management and targeting based on auction principles. Why does the market go up and down? Well, it's trying to figure out what's too high, what's too low. Do we know where too high is? No, we don't. I do know this was too high over here. I know if I come back to it, I can take it out and keep going, or I'll find my seller. I might only get a counter rotation and then rotate back up and make new highs. I know all of that. What I don't know is what it'll do. That's the only little problem. So if we can't predict what it'll do, how do we hang in here and trade it? Well, we basically anticipate where and what it might do, not what it will do. So for me, if I get long, I got to deal with this. That's why the line's on the chart. And let me take you into microstructure. Let's make it more fun. Watch. Now I'm really going to go down into microstructure. And I'm going to just show you some ideas. And the thing that's important in all of this is, what's the market doing? Is it going up or going down? And I mean, at the moment it's going up. Do I only want to take longs in this condition? Because I anticipate we had just profit taking at the previous high. Don't traders take profits just in case we get a double top or something and we get a counter rotation? Might this only be profit take? Or is this the high of the day? I can't answer that. So what do? I know this structure right here in the fractal, there's my seller, here's too high. I know if I get profit taking and I find my buyers again, then this thing is going to potentially get taken out. That's what I know. Or I see this and I'm just going to get out of the trade. I mean, it doesn't matter. See, the thing about it is, what is your plan? It's not what anybody does. There's traders who are going to sell this, buy this, sell this. I mean, this is their thing, not me. My thing is larger swings. So I do know this is yesterday's high and this was our target. I don't know if we're going to take it out. I do know, here's what do we know about yesterday's high? There's buy stops. So we can come out here. Let me look a little higher up on the food chain here and just see if there's anything else of interest. We do have this. Anything's possible, guys, trading. So let's watch the behavior together and I'll look at your questions. So you see how these structures, and look where we came back. I just want you to see behavior. You see this? This is the high volume node, and think of these consolidations like shopping. It's too high, it's too low. Low volume node. I come back. Where do I come back? The retail price in this store, right here. That can be a long to here. Now, I understand you're going to look at this and you're going to find it maddening, confusing, probably contradictory. It's a way to see alignment. And the problem, of course, is it's not predictive, it is potential. But when you can determine the behavior based on how the buyers and sellers interact, you can tell at times where too low is, and you only can anticipate it, you can't predict it. And if we come out of a distribution and go higher and find micro too high, we can anticipate behavior there. If I rotate down to what was retail in this and it becomes too low because the volume was there and the buyers were active here. If I return to it and I have my sellers, and now my sellers come back into the volume, which is right, you can see it here. This is the retail price in here, and the buyers were absorbing, break high. I come back to it. Is it now still too low? And we don't know. Here's my seller going to zero, Lewis. What do I see? A buyer. It's a long. Your stop can be under the volume or under here, and now you got to scale here. These are structured trades. You can learn this in Trader Lab. I'm not saying, that you don't have to put time in, and you don't have to be trading this. You could be long from further outside if that's the time frame you trade. Does that make sense? And again, we don't know. This might be the high of the day, right? And if you get long here, it might give you a ripple and you take a stop. Nothing changes. It's still trading. Questions? And please give a thumb up in YouTube. Let me take a look. Thanks, guys. Just trying to give you the lay of the land. Give a thumb up, guys. And remember, if you're in YouTube, these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer. This one will be available just through the week. And the idea in Trader Lab is not to be predictive, but to be aligned. And the thing about the market is it changes, right? So if we accept we don't know what it'll do, it's really, can you read what it is doing? And when it doesn't do what you anticipate, then it can suggest a change in behavior. So if I'm on the short side and I see something doesn't happen, I can then be alerted that there's a change in condition. But this is where you would take a scale. If you were getting long here to there, or here to there, and then helmet, and then it's trade management, you see. Now, other way you can do this is you don't move your stop. You just get risk neutral. Stop stays there because you have this. What's your plan? You'll be able to keep an eye on this. And if you have an order flow tool like Bookmap, you can actually stay in alignment. Now, look, I'm seeing my sellers coming up here. That is alerting me that these buyers are being absorbed. So I have to be conscious here. And I can also look at the order flow here, and this is resting liquidity. This is an algo, bracketing algo. I ignore it. We have also other tools in Bookmap to get rid of that. You won't even see it. But I didn't have time to turn it on here. I do use it. It's called TraderMap Pro. It's a filter to take the garbage out and just let you see this. This is also a potential target. Now, with resting liquidity, it behaves differently. And notice where it is, 55.25. That's a strike price. You'll learn about this in the Trader Lab and also in the Bookmap Discord server, where you can learn a lot about market mechanics, market maker behavior, gamma, and there's a lot more, algorithmic behavior. But let's see what we see right here. Let's follow the yellow brick road. This is resting in the book. Passive. Remember, this is the passive side. They're sitting out here. We can see them in the book. This I ignore because it's a bracketing algo. So I'm seeing the sellers here. This is resting liquidity. It's not the algo. You can see the algo bopping around here. Right here are sellers. Seller. Watch. Let's just watch the structure. Does this give me an edge for trade management? I'm not going to be a seller. I might be a profit taker, you see, in my fractal and time frame. Why? Because of this microstructure right there. I'm going to put a line on it. It's not a trade recommendation. I'm not somebody who holds, for the home run. Home runs are nice. They happen. I find that when I recognize changes in behavior, I want to be alert. Right here is my structure. If I can't clear this, it's going to come down. If I can clear this, and I see a seller, you see the iceberg? Right here, very important. Do the buyers absorb these sellers right here and keep going? Then it's hang out. If I can't get back above this and I come back down, not a recommendation, I might exit the trade if it's part of my plan. So I'm using this behavior. The last buyers were here. They absorbed the sellers. You see it? My sellers are here. There's my exhaustion in my microstructure. I get my seller here. This is a selling trigger. Now, what happens on my retracement? Do I exhaust or do my buyers come back? And you see this? So I have no short, no exit. I'm using this. So this. And now I've got to watch it. What's at 25? Liquidity. And my algo, of course, is messing with it. So I'm looking at 25. This is starting to pull. So this might not be real. So again, I'm just managing the trade. So this is what I do. I call it trading in fractals. I don't know where the high of anything is. I don't know anything. So my job is not to know. Let's watch the behavior. This is the last place, right? If it comes out of here, I'd be out. No problem. Let's look a little further. This is my high volume developing. It's right there. If I get under here and I can't get back above here, it sets up a larger rotation down. It's not a short unless it's in your plan and you could trade in this time frame. Notice where we are. There's your high volume in the microstructure. Going to draw a little box around it. This sets up either an exit or a short or a go to the bunker or whatever you want to define it as. This is auction market theory, and all I'm doing is trying to stay in alignment. And I cannot predict anything. Trust me on that one, because I can prove it. I don't try to. I found out that I can't do it because it's all random. So let's look at the structure. This should actually be over here. But in this structure, now let me do you one other, just to make you a little nutty. And I trade this way, and I don't, when I see this, let me show it to you. Now I'm going down with the scalpel, surgical. So when I'm looking at Bookmap, I'm always looking at fractals. Where's the fractal here? Where's the high volume? You see that little node? What is that? That is high volume in micro. Here's the delta, and I don't know it's there until I get the break. When I get the break in the microstructure, and this is just a couple of ticks, I'm aware of it. I don't know what will happen. I could just do this and go through, okay? But I'm already aware I might have found a temporary high or more, and I don't know that. Now I get volume here. It's under this micro low volume node. Remember what I'm doing out here, low volume, right? Well, now I'm doing the same thing, but I'm in a microstructure. High volume is here. Micro is there. If this little structure is too high and I break away from it, now I have resistance. Now, and then I'm going up in fractal to this time frame. So I have this, not actionable. It's just like, okay, when I break under here, I know If I don't come back above it, there's a problem. But hindsight, not foresight. Hindsight. Don't have foresight. I break below this volume now. This is now resistance. So let's just see what happens. I'm coming above it. Where did I pull? Outside edge. Where is it? Out here. See? So I know I had my buyers here. I know this was too high. So I can navigate this. Now, I don't have anything to do here, but I can tell you if I'm sitting long, if I took a profit, I'm okay with it. I'm just telling you, that's me, not you, me. And I know to go higher, I got to come through this right now. Probably will, because what are we doing? We're going higher. And what's our potential targeting? You know, it's up above. So what do you do with this? Do you exit your longs? Certainly don't take shorts, or unless we really fall apart. So if you're trading continuation trades, I'm giving you two sides of the equation because I want you to be able to read it. This is too high. This is too low. Do you want to get long or do you want to exit your long? You could do either. Do you want to get short? Not me. It's just exit or continuation trades. And if this thing does find a high, I won't know it until it starts breaking down through the structure. The structure is micro time frame, counter rotations. So I can read the rotation and I can also read where the locations are for the support. This, you see? So if you think about this, resistance, support, long, resistance, break high, resistance, counter rotation. Where do we come? Support, right? So resistance becomes support. Let's look. Too high, back to support. Outside edge, back to resistance or high volume node. This is the mean, and this is called mean reversion in an uptrend. So you could be out, not shorts, or just longs to targets and scales, going towards a higher time frame target until it falls apart. This is trading in fractals. I'm hoping you're getting something out of this. I'm not suggesting you trade these fractals, but what they are is time frames as you think of them. So you could just put this thing on here, take a powder, or get out here, put it back. Scale, or scale here. Whatever you want to do. This is what you can do in Trader Lab. There's not a right way to trade. There's the way that aligns with you mentally. I hope you're getting some out of this. Questions again, I got 5 minutes. Thanks for your patience. I just think it's kind of useful for you to see a methodology that is a consistent. See, the idea of trading for me and what I've found and other traders I know who've been doing this, I'm on 45 years of this now, is not what the market's going to do. It's a consistent process to apply to the current condition and the developing condition, and know basically where the condition changes because it's a defined condition. So what is this condition that we're in? Let's talk about it. We're in a uptrend, which is the condition at the moment, which can change any moment, and we are trading something called mean reversion. Mean reversion in an uptrend is longs only to get in alignment with the trend. And mean reversion is called outside in trading. So what you're looking to do is get outside and then come back to the mean. The mean is these high volume areas. And if you go down in structure, the mean is these little itty bitty areas because they're all the same. It's just Russian dolls, fractals. Does that make sense, guys? I hope you're getting out of this. Please give a thumb up. And remember, if you're in YouTube, there's a link in the bottom of YouTube. You can come to the Bookmap Discord Trader Lab community. It's a chat room. Goes 24 hours a day. We got traders, trading in Asia, trading in London. And they're all over the planet, even Australia. I mean, we got everybody. And it goes 24 hours a day, 7 days a week. Hopefully you're taking a nap on the weekend, but hey, this is trading. And there's trade a lot of diverse markets. I primarily focus on ES for developing traders, but you can take this process, extrapolate it, and apply it to any market. The reason this works in a market, because this is foundational to how markets operate. You can trade a jelly bean with this process if there was liquidity in beans and you had a real-time pricing. It doesn't matter. It doesn't matter what you trade. So, I mean, I've traded across many different asset classes. When I was a fund manager, same difference. I used these behaviors. I learned market profile mid-1980s from the guy who created it, Peter Stottlemyre. And I will tell you, I didn't get it. I truly did not get it. And that's because I was so attached to my indicators and all the years I spent working with trading systems that mentally or psychologically it was very hard for me to disengage from something I, quote, believed in, even though over time I was always curve fitting and optimizing, trying to fix it. I didn't quite yet, wasn't willing to let go. There's the old saying, well, at least I got something out of it. You know what I got out of it? Continually re-optimizing. And let me use the translator for that, curve fitting, trying to fix it. And I coined a phrase called Trader Groundhog Day. In fact, there's a webinar in the library in the Bookmap Discord Trader Lab community, which you can access. But in fact, there's a full library of webinars on this process, some up to 5 hours long of real-time narration in all different configurations. The thing about the market is it can be directional in one time frame, right? It's going up. I think we can agree this thing is going up. But what happens here? What do we do with that? Do we want to, certainly I'm not going to short it, but if I understand how it works, can I use it for ads and trading inside my position, if that's part of my plan? Can I go, well, I'm long here and I'm scaling and whatever, and I see a rotation, I bail out here, I put it back on here. Or I've got a core position on from a lot lower and I'm just trading the rotations. All these, and why might this be a long, you're asking me? What happened here? Seller. Volume. What happened here? Volume. Outside edge of a distribution. Too low. Where did we come back? Here. What was too high? Here. If I get long here, I can scale here, I can scale here. If I break high and I pull back to this, what can I do here? I can add. Do you see it? Give me a thumb up in YouTube, guys. Give me some encouragement to encourage me to keep doing this. I'm not a vendor, so what do I get? Encouragement. And a thumb up in YouTube. That's all I'm asking for. And the other thing I'm asking for, if you think this might be helpful, if you want to be in a community of like-minded traders that have come together, and I'm talking new developing traders we have a trader in there over 50 years of trading experience. Makes me look like a puppy. And I'm going on 45, both professionally and otherwise, and now sitting out here with you. And I believe anybody can learn to trade. Anybody, if they do the work and they use processes that others have proven work for them. Now, the differentiator is you have to be willing to do the work and go through a learning curve. And the word work, I want to underline that. If you want to become competitive in this business and approach it like a business, you're going to have to go through a learning curve, and you're going to also need to let go of beliefs that might not be in alignment with what this business truly is. This is not a predictive business. We are in a there's a seller there. We are in a continual random environment. Nobody can predict that a seller would show up here and there's a counter rotation. Nobody can predict that we wouldn't just keep going. What we do know is what happened here, that the buyers absorbed these sellers. If we know that and we have structure right there, we can anticipate, underlined, that we might get absorption or buyer here. And right here, it looks like it's going to zero. What do I see? Absorption. And this is my entry. Then I got a scale, and now what am I doing? My stop is now under here. Does this make sense? Thumb up in YouTube. Click the link in the bottom of YouTube. There's 60 PDFs of these structured trades you can download, plus statistics and a lot more. And there's no cost. I don't know about you. I wish there was something I could have got besides a book and seminars and, you know, and there are chat rooms out there and vendors that have something to offer. Absolutely. And then there's probably more, as you know from your experience, where at the end of the day, you just wasted time and dollars. Notice this. We have a selling iceberg, and the buyers were absorbed. That's what's creating this. Now, the random nature of the market is, what's it going to do? Can you answer the question? I cannot. What can I do? What do I have control over? Only myself, not the other participants, not where too high is and where is too high. We will never know until hindsight. So what do you do in the meantime? What's too low? Here. What's too high? Here. Where's the microstructure? Right there. There's the seller. See what I'm saying? And then you just put your helmet on, follow a vetted trade plan, accept what the market offers, and thanks for visiting the Trader Lab today. Thumb up in YouTube on the way out. Thanks again, guys. Remember, these streams are available exclusively to Bookmap Discord Trader Lab participants, to reverse engineer, screenshot, etc., plus the library of webinars and a lot of other stuff. Not to mention there's additional education, stocks, options, crypto, order flow with a high-tier tool like Bookmap. This is where the rubber meets the road, gives you additional insight and timeliness, understanding market maker behavior, options, crypto, if I said that, algorithmic behavior, and a lot more. It's really up to you. Thumb up, visit the Trader Lab, and I believe this will be a real positive step if you're not getting the results you want. See you guys next week. Thanks for visiting Trader Lab. Here's just a quick look at what these PDFs look like. I'm not going to spend any time with them. I'm out of time, but you can see it'll get you started. And it's not plug and play, guys. If it was plug and play, we'd all have an ATM in the basement. Unfortunately, if you want to be a professional trader and build a career, you've got to invest in yourself. And I always say, invest your time before you invest a dime. Thanks, guys. Thumb up. Have a great weekend. And thanks for visiting the Trader Lab and for all your support. And don't forget the thumb up in YouTube.